Hey everyone, I'm Jeremy Szafron, and this is Kitco News. Make sure you hit that subscribe button for the freshest insights in markets and, of course, commodities. Well, silver's making waves again, folks. Today we're seeing it break past that $26 mark, edging closer to $30. So why the buzz? Well, it's not just jewelry and coins anymore. Silver's powering our future, from solar panels lighting up our world to electric cars zipping around our cities, not to mention its role in the cutting-edge world of 5G technology. However, the journey for silver has seen its twists and turns. Since March 2023, the silver market has been forming what analysts call a triangle pattern on the charts. Now, this pattern, where the price swings not progressively smaller, suggests that silver is at a crossroads, with its price consolidating and building energy for its next big move. Now, the setup often leads to a breakout, but whether silver will shoot up or tumble down remains the big questions keeping investors on our toes. Today, to explain this, author of this book, The Great Silver Bull, and publisher of the silver-focused newsletter, The Silver Stock Investor, Peter Krauth, joins us now. Thanks for coming on the show, Peter.
Jeremy, pleasure to be here.
Always a pleasure. We were just talking off camera a second. I saw you a couple months ago. There was a lot of excitement in the industry, even more today. So let's break it down, Peter, with today's price breaking the $26 mark, hovering around 26, almost 27. Getting closer to $30 anyhow. Talk to me a little bit about the main factors propelling the rally, and how does it align with your long-term predictions?
So, I think that really what's driving silver right now, because you're right, you mentioned at your opening, it's been in a sort of consolidating move for the last few years, in fact. I think that really what's driving it right now is gold making all-time highs, and that's actually impressive, and impressive by the fact that people are not excited about it. You don't see gold being quoted on mainstream media through their ticker marker running across the screen. I just read yesterday that you have coin dealers are actually receiving twice as many requests to buy back gold from their clients than they are to sell to their clients. So sentiment really is nowhere close excitement. And that is very, very bullish for the precious metals, because it tells you that we're much closer to the beginning than we are to any kind of a top, where when you get, at a top, when you get this fear of missing out and everyone's overly excited, that's when your odds of, it being sustained are much lower. People have done all the buying. Everyone's sort of piling in, and there's not much of the move left. Here we're really at the opposite end. So I think that this is the start of a very long and sustained move much higher.
Okay, so you think this will be a sustained upward trend. I'm curious, this price action, we always see it get close to that $30 mark. It almost seems like the market's short a little bit. Talk to me a little bit about the manipulation. What happens here at these levels?
So, we also don't have too much excitement. The one side where there is, I guess, a fair bit of participation, and that is in the futures. I was just looking at some of the numbers this morning. And so we are getting to a point where speculation is kind of high. We may get a small correction. That would certainly not surprise me. I hope we don't get all kinds of hate mail because of it, and I'm as big a silver bull as anyone. But my point is, on a very short-term basis, I think both gold, more gold actually, because gold is at all-time highs. But I do think both metals could be in for a really small correction. I'm really talking small amounts over the next sort of week or a couple of weeks, just because really has become a little sort of near-term frothy. Absolutely much more gold than silver. That would not surprise me, but yes, these are moves that could certainly be sustained. And I think that when it comes to manipulation, my view at least is that there is manipulation, and not just in these markets, and that tends to be kind of on a shorter term basis. The big players play with the markets, play with the price, benefit from it in terms of a sort of a longer term managed kind of manipulation. That's where I honestly don't know a lot about the futures market, but also have a hard time understanding how that would be possible to sustain on an ongoing basis. I'm talking years and perhaps even decades.
Now, let's give a little bit of a take on, let's go back a little bit and talk a little bit about silver, just as a metal here. You've highlighted how the global push towards green technologies, coupled with, of course, geopolitical tensions, and then we got the economy and economic policies here. It's really reshaping the demand for silver. So as we see a surge in the industrial uses, particularly, as I mentioned off the top, in solar panels and EVs, elaborate a little bit on how these factors synergize to influence the dynamics here in the silver's market.
So, if you're looking at the silver market, really, if you're not paying attention to what's happening in solar in particular, then you're really missing, I would say, probably the biggest single driver other than investment demand, because solar has really become what I call sort of the 800-pound gorilla in the market. It went from few tens of millions of ounces maybe a decade ago to over 200 million ounces next year. That's what the forecast is. We were at nearly 190 or so million ounces in 2023. And so industrial has become more than half of the silver market in terms of demand, and solar represents something like 30% of just industrial. So solar at 200 million ounces is 20% of the entire silver market every year,
Right.
which is roughly about 1 billion ounces. So you've got to watch what's happening in solar. And the fact is that solar capacity is being built out dramatically, led by the Chinese. About 80% of the market is China in terms of manufacturing. And solar demand, so sales of these panels, has also been beating forecasts dramatically. Now, if you take sort of I think, a reasonably even conservative view of solar, and you say to yourself, all right, so there's been all this capacity. What if there's some sort of recession, things slow down, and there's less demand for solar, and solar kind of plateaus, and building out of the solar economy and the solar sector starts to plateau, you are still going to get a lot of demand of silver in from the solar sector, just because we are transitioning to new technologies. So the, I guess, incumbent technology is what we would call PERC. It's about half of manufacturing capacity right now. About 3 or 4 years ago, the next two technologies that, by the way, require from 50 to 150% more silver per panel. These were about 10% of manufacturing capacity. Last year, combined, they were already 35%. The Silver Institute thinks that the next generation, which is 50% more silver per panel, is going to already represent 50% of new manufacturing capacity this year alone. So even if we plateau in solar manufacturing capacity, the fact is that we're moving to technologies that require more silver. So that is going to continue to feed the demand of silver from the solar industry.
Now, Peter, you continue to talk a little bit about supply and demand, and that divergence over the past couple of years. I'm curious if you anticipate any specific regions becoming maybe more pivotal in silver production or innovation here.
Well, when you talk about regions, you mean geographically?
Yeah, I'm thinking geographically. I mean, silver mining, obviously, Mexico's the largest one here. Are you seeing any specific regions, trying to really bolster up their supply and demand issues going on in silver and trying to take over that demand?
Well, as you say, Mexico certainly is by far the largest producer. From there, you have in second place, and it's a little bit debatable whether it's China or Peru. But both Mexico and Peru, where we have, I guess, what you'd call relatively reliable data, have seen their output drop dramatically, something like 20% over the last 10 years or so. So that's kind of concerning. Where are we going to get new silver from? Great question. There aren't that many places that you can actually find silver. If you look at the Americas, it tends to be focused on sort of the West Coast. So you see whether it's Canada, the US, all along sort of these mountain ranges is where you tend to see concentrations of silver. In South America, it's the same thing, mostly along the Sierra Madre, the Andes, and so on. There is a potential that we're going to see more silver come out of places perhaps like Australia, perhaps even Europe. There is a lot of silver that comes out of Poland. There is one sort of smallish potential project that I see in Germany, for example. That's a long ways off. There is a project in, I believe it's Serbia, that's starting to come online. There's a large producer, a relatively large producer out of Morocco. That's a place I think we need to watch carefully. That's Aya Gold and Silver. They're actually in the midst of a big expansion that's going to take their production from 2 million ounces to 8 million ounces. Now, that's fantastic for Aya and for Aya investors, but it's going to do very little to impact supply. And I was actually talking to a silver researcher this morning and talking about the whole sort of demand supply aspect of the market. And really, there are constantly new mines coming into production. The fact is that there are also regularly mines going off production. Either they've reached the end of their lives, or there are some sort of geopolitical issues. It could be not profitable. The mining company decides there are some serious challenges. There was a interesting bit of research from Bank of America a little while back that they went and looked at the 13 largest primary silver mining companies, asked them where they thought silver mine supply was going to be over the next couple of years. And they all said on average, it's going to be flat for the next at least 2 to 3 years. It peaked at 900 million ounces in 2016. They expect we're going to be about 800 million ounces over the next, per year over the next couple of years, which is just incredible when you think of how demand has just been ballooning and the deficits that we've been living through each year for the last 4 years have been sustained, and the Silver Institute thinks those will continue to be sustained. So, we can talk about that a little bit too. There are structural deficits. Why is the silver price sort of capped, if you wish, if we're facing deficits? And I've spent some time doing some research and some digging, and I think I know what is affecting the market this way. What we've seen in the last couple of weeks, it looks like it may actually be starting to reverse, but there are some really specific things I think that have led to where we are right now.
That's interesting. I want your outlook on silver, but before we get to that, then talk to me a little bit about that. Well, what's holding us back? Usually when you have a supply and demand issue and demand is up and supply is down, the prices go up, but it hasn't really been there.
Exactly. So that's economics 101. Exactly right, Jeremy. So, I had sort of a suspicion that if we had structural deficits and the price was really not moving, and we had, it's not just 1 year or 2 years, it's been 4 years straight. We still have forecasts for these sizable deficits. We're talking well above 100 million ounces a year. So more than, say, 10 to 15% of the entire market, again, in structural deficit for the next couple of years at least. How is it and why is it that we're not seeing the silver price move? And I had this suspicion that industry, especially, which is the big consumer, is getting their silver somewhere, somehow, rather than from mining or from the recycling, which are the two main suppliers normally. And so if you look at, and so I did some digging, found inventory charts for the COMEX, for the LBMA, for the Shanghai, and over the last 3 to 4 years, each and every one of those exchanges has seen their overall silver inventories drop about 30 to 40%.
Wow.
And now that's just overall inventories. That's not what is supposed to be available for delivery. They've got something called registered silver, which technically, apparently, is what is available for delivery if you want to take delivery. And that's down 70% on 2 of those 3 exchanges. So I suspected, and still do, that you have large industrial users going to these futures exchanges, buying long futures contracts, and simply standing for delivery, going to the exchange and saying, okay, my contract is expired now. I'm entitled to take delivery. Here's the address. Here's where I want it shipped. And that's that. And so there's another aspect too, and that is the silver ETFs. And they have seen their inventories drop dramatically. I did some research on this, and there's some really interesting charts that I've put together. One looks at, you really kind of can look at one, which is the largest, which is SLV, goes back to 2006, the first of all silver ETFs, and the largest, has about $10 billion worth of silver. And if you look at how two aspects of SLV, you look at how the silver price has behaved, and you look at the number of ounces that are held by SLV. So going back to 2006, there are two periods where early on in its life, where you would have, silver, the silver price ran up, went through a correction. The first one was in the Great Financial Crisis. So silver went up to about, I think it was about 18 or 19, $20 or so, corrected to about $10. And then, and what happened during that period was you still had the number of ounces held by SLV rise in that period when the silver price corrected during the financial crisis. So that means that people were still buying SLV despite the silver price falling. The next period was when the silver price peaked in 2011 at, say, $49, and over the next couple of years went into a big correction and went down to about $25 or $30. During that period, the number of silver ounces held by SLV also moved, or this time moved in a sideways pattern. So people, on balance, were not selling their SLV units. Now, fast forward to 2020, 2021, you had this big run up in the silver price when the COVID pandemic hit. Silver went from, say, $12 when it corrected in, say, March of 2020, run up to $30. And since then, have been in a range of, say, $22 to almost $28, $30 ever since about mid 2020. However, since early 2021, the number of, in fact, in that period in 2020 when COVID hit, the number of silver ounces held by SLV ran up dramatically to like an all-time record high. I think it was something like 600 million ounces. And ever since then, it's been dropping and dropping steadily. So we've had about 3 years of sustained drops in the number of ounces of silver held by SLV, and yet the silver price moved sideways. There has not been in SLV a period of sustained falling of ounces held by the ETF until the last 3 years. I believe here again, you have the large consumers are buying SLV, are allowed to exchange their units for physical silver and taking delivery. And that explains, in my view, that explains why we've seen the silver being drained out of SLV as much as out of the futures exchanges.
Interesting stuff. I'm curious, what are the implications of a market where these contracts can't be fulfilled with delivery?
So that's what I'm wondering about myself and concerned
like, what do you do?
Yeah, I mean, I think that's going to be some sort of chaos. I think that you're going to have a big consumer of silver stand for delivery. I think these markets were not really meant for that, but this is, as I say, based on what I can tell, how a lot of the industrial users are actually getting some of their silver. This is where they're getting it. And all it takes is for one big consumer to go to the market, hold a long contract, say, okay, it's expired. Now I want my silver. And for the exchange to say, oops, sorry, we're out of silver. We're going to have to pay you out in cash. And they're going to say, no, I want the silver. I don't want the cash. And they'll say, sorry, force majeure, no more silver left. Here's the cash. And that consumer, that user of silver is going to scream, and we will hear about it.
Interesting. Does the user or consumer, is there rumblings of this? I mean, do people know about this? Have you been, you're in the industry, people talking about these rumblings?
I have not heard about it. What I have heard is, in fact, just about a month and a half ago, a large-ish silver producer has told me that they sell part of their production to China. They sell part of their production to the West. And the Chinese are coming to them and they're saying, we really, really, really want the silver. We're prepared to pay you a couple of weeks in advance. And we're actually prepared to pay you $3 over spot in order to get our silver. We absolutely want our silver. So that to me is the best indication of the tightness in the market. It is severely tight. but we're just not hearing about it. And this is, it's these kinds of anecdotal bits of evidence that certainly point to it.
Yeah, interesting. What an analysis. Okay, let's get back on to the outlook because, of course, supply and demand should mean prices go up. And you've suggested, obviously, you have a bullish outlook, but you've projected potential climb to over $30 in the latter half of 2024. We're currently sitting around that 26.86. We're getting close, right? You probably were correct in there, but you've even positioned yourself maybe a scenario where silver could reach $300 US by 2030. So let's break this down. You may have been correct about the 30, but 300?
Well, 300, I mean, I know it sounds sensational, but when I got to that number, what I did was I looked at what had happened to silver prices in the past, and I compared it to other assets, important assets, hard assets typically, or stock indices, for example, large indices. And so a couple of examples are one of the probably your viewers understand and know the best is the gold silver ratio. So I said, okay, if I'm going to look at where silver could go ultimately, what has it done in the past? Well, in 1980, when gold peaked and silver peaked, the ratio fell to somewhere around 14 or 15. At the time, gold was $800, silver was about $50. And the ratio, as I say, was let's use 15. So I said, okay, if I look forward and I make my own projections, and I'm not the only one, by the way, and I detail this I provide lots of detail about this in the book, how I get to this, the fact that I'm not the only one. I believe some very, very, very smart, observers, researchers in the sector have forecasts for gold, and I went with 5,000. I think that's a realistic target. We're almost halfway there at this point. So I don't see 5,000 as the biggest stretch in this bull market. In any case, if you use a $5,000 gold target and you say 15 to 1, you're at $333 silver. So to me, not a stretch. If you use, and I think it's probably perhaps more realistic, ultimately, perhaps say we go to, and again, I'm not the only one, some very savvy, very accomplished, very well-respected analysts, it's all in the book, have reached $10,000 as a target for gold. And if you do perhaps say $10,000 and you use a more conservative gold silver ratio of say 30 instead of 15, you're still at $333 for silver. So that's the gold silver ratio. If you look at, for example, in 1980, when silver peaked, you look at the silver price versus, let's say, the average home price. So at that point, when silver peaked, it took just shy of about 1,500 ounces of silver to buy the average U.S. home. If you go with today's numbers, the average U.S. home costs about $500,000, let's say, make it even easy round numbers. If you use that same ratio, you're looking at, right around, I believe it was $333 silver. So by that measure, again, you're at over $300 in silver. If I look at the inflation rate, and officially we're at say 3%. If you look at where we've been for the last several decades, it's probably averaged about somewhere around 3, maybe 4. But more realistically, and everybody in their daily lives will tell you that they're not comfortable with those numbers. They don't feel that they represent what people actually have to deal with and live with. And there's a fantastic research service called Shadow Stats that calculates, in fact, inflation the way it was back in the 1980s. And they have inflation running at more like 7 or 8% for the last, say, 40 or 50 years. So if you project using inflation rates that are more realistic, again, you get a peak in silver much closer to about $300. So I think I'm being quite reasonable. And I also say that to get to that peak, we're going to be in some kind of a mania phase. I'm not saying silver's going to steadily to $300 and it's going to stay there or it's going to keep climbing. I'm saying, ultimate crazy FOMO mania, silver could easily reach 300.
Yeah, well, I mean, we've heard crazier things over here, so I could probably, I'm not going to call you out on it. I'm curious, though, when you talk a little bit about that gold silver ratio, it seems to be very divergent. I talked to an analyst last week saying he's not sure if it'll ever go back to the place that it was. But I'm curious, are consumers or investors purchasing silver because it's easier entry to the market in terms of price than gold?
So that's one of the reasons I think that silver lags gold, but then eventually outperforms it because
Hmm.
so people will go to gold first or pay attention to gold first because it's the king of assets. It's the king of it's certainly the king of precious metals. It has been for thousands of years, and so everyone pays attention to gold first. And as you see, people ultimately, eventually decide they absolutely need some exposure to gold. And gold, let's say we're talking about 12 months from now, gold has run up, it's 2,500, it's 2,600, let's say. They're going to look at gold and say, wow, that's rich. For me to buy an ounce of gold and to put that kind of money out, what else can I get? And silver is the natural alternative to that. And even if silver is at, say, 30 or 35 or $40, they're going to look at gold 2,500 for an ounce, silver $40 for an ounce. Much less. It will have run up much less, even at that point, still below its all-time high. Gold will have set new all-time highs, and I think that that's one of the reasons that silver will gain in appeal. You'll have investment demand really become the wild card. It will pick up dramatically, and people will shift their interest from gold to silver and really push through investment demand, push the price ultimately a lot higher.
Interesting. We talked a lot about the supply and demand crunch here. How do we prepare for it? Are there strategies that you could talk to investors about that could maybe mitigate the impacts of these constraints on the market?
So, if are you talking about, say, investment demand specifically?
Exactly. Yeah.
You buy it and buy it now because it's
Yeah.
probably only going to get more expensive. Uh, you know, yes, people will say, well, the premiums are high. They're actually not as high as they have been. If you look at, and I'm not saying that they're low. I'm saying that they're not as high as they've been. If you look at what happened during COVID, you could not even get your hands on silver. If you looked at what happened during the silver squeeze of late January 2021, again, you could not get your hands on silver. I mean, there are stories, I talk about that in the book, where you have these bullion dealers just never witnessed anything ever like that. And then these are people who've been in business for decades. It's sometimes a second generation. They've never lived through markets like that. Their computer systems were overwhelmed, their phone systems were overwhelmed, and they knew it was basically retail buying because it was mostly small orders. And they were starting to tell people, I'm sorry, I can't ship this in 2 or 3 days. I'm going to have to ship it in 2 or 3 weeks. And in India, for example, to the best of my recollection, some of the premiums, this would have been during the COVID pandemic panic, went up to almost 100% over spot.
Right.
So
Yeah.
people really, really wanted the silver and were willing to pay for it. And I'm suggesting get involved when people are not excited. You will have the benefit of having access, getting delivery under reasonable times, being able to shop with peace of mind. You'll pay, as I say, reasonable premiums, relatively reasonable. They tend to where normal premiums historically have been, say, 12 to 15%. If you're even at somewhere around 20%, I think that's attractive today. And I think you can probably find those kinds of premiums right now. So I think get involved now, buy a little bit at least to get your feet wet, get that coin in your hand, appreciate what it feels like, what it looks like. And I think you'll be sold and start building on it.
Yeah.
Someone pointed out, actually, a subscriber pointed out to me something interesting. And I'm not suggesting people do this, but it is an option. And that is that the Royal Canadian Mint has its own version of a silver ETF, and the silver is stored at the mint. Well, not just their product, but others as well, will over time trade anywhere from discount to net asset value to premium to net asset value. And so this subscriber, these are the kinds of things that I know of, but I'm not constantly tracking. Yet a subscriber wrote to me and told me about this and said, right now this product is trading at about 12% discount to the silver price, and that for the silver that's actually being held by this ETF. So I went and looked at it, And then I told my own subscribers about it, and I said, right now, that's actually got worse. It was at 16%. So worse from one point of view, better from the buyer's point of view. You're actually buying silver at a 16% discount. So, these things don't tend to last. That's likely to correct, especially if you get people piling in and silver's making new highs, say 12 or 24-month highs. And that's one way. I'm not saying that's the same as buying physical silver. There is no equivalent. But I am saying that you can get exposure. You can get it quickly.
Interesting.
You can get it out. You can buy something like that, wait for it to reach NAV or net asset value, or wait for it to reach a premium to net asset value, then sell it and switch to physical silver. These are the kinds of things that people do, and the kinds of things I've talked about tactics you can use. Talked about that to my subscribers, and it's kinds of things people can take advantage of. It's certainly one way to gain exposure and not overpay.
Right, and to mitigate that risk a little bit. Well, like our friend Rick Rule says, he loves silver because it's hated. So maybe not a bad strategy there.
Absolutely.
The author of The Great Silver Bull and the publisher of Silver Focus newsletter, The Silver Stock Investor, my friend Peter Krauth, joining us today. Hey, thanks for coming on the show, breaking it down for me and the viewers today.
Jeremy, always a pleasure. It's always fun to chat and to give my insights, and hopefully I have helped to contribute something that your viewers will find helpful.
You absolutely did, and I could have chatted to you all day, but we'll have you on again soon, Peter. Appreciate your time today. Thank you so much.
Thank you. Thanks so much.
And thanks again to our viewers. Don't forget to go to Kitco's YouTube channel, subscribe, like that video. Believe it or not, I read the comments, and we'll see you tomorrow. We'll see you next time. I'm Jeremy Szafron for Kitco News.